Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic week. It is Thursday. You know that's me. That means it's time for high probability short-term profits. With Mike Wade, we'll get Mike here in just a minute. First up, we have a quick market review with just talking about how things are going right now. We're going to also talk about our portfolio, still at that 90% win rate, 43 out of 48. Then we're going to talk about some of our recent trades. So we got TSM and USO. Then we're going to talk about a trade today, and hint, they just had earnings, but I'm not going to tell you exactly who it is. Then we're going to go over some of your stocks, some of your tickers that you have for us. So keep an eye out for things. If you have anything for us now, go ahead and put it in the chat. Let's get it going. Mike, Mr. Mike Wade,
Hi.
how you doing, sir?
I'm good. How are you?
I'm doing well. It's been a crazy week, but like I think I said yesterday, this week's been a long month.
It's been a long month for me too, man.
Yeah, I'm sure.
Yesterday I moved from I'm on a farm and there's different houses and I'm renting Airbnbs long term and they kicked me out of the one I was in.
Oh
So I
wow.
moved about, I don't know, 20 meters up the road and my car broke down. I had to do it all manually, like carrying stuff up the hill.
Jeez, that
Check
does
out,
sound rough.
check out my view.
Not a bad view to not a bad consolation view.
Yeah, there's my boy Zion looking for monkeys. Yeah, it doesn't suck. It doesn't suck. That's for sure. And you know what else doesn't suck, Ryan?
What's that?
The markets.
Ooh.
Let's take a look at the markets. I'm going to go right into the Hub software and I want to talk to you about what's going on in the markets. First off, the thing this morning that you may or may not know is the jobless claims number came in lower than expected. I'm in the Hub software. You can check out this software at hub.com. But here's a chart of the S&P 500, the ETF I always start with. And yet, we've had a bit of a pullback after touching all-time highs up here right around 585. And so we've had a little bit of a pullback. What's causing the market to drop, or at least the last few days, is treasury yields are rising. The 30-year, 20, 30-year bonds, these are loans from the US government that we lend them money and we get paid an interest rate, and they're supposed to be really safe. And those yields are rising because the economy looks strong. And so bonds, think of you're borrowing money or you're lending money to a company or a country in this case. If they're showing health and vibrancy, then the value of those bonds or the yields of those bonds are lifted. So that's what's brought us down a little bit over the last 4 days or so. But now, if I look at the futures, and these were down yesterday, this morning they were down, but you can see here the Dow is flat. The S&P 500 is up almost half a percentage point. NASDAQ is up pretty big, 0.86, almost 0.96 9. So the NASDAQ is strong. Oil is strong. We've talked about oil since the Israelis were attacked by the Iranian onslaught of ballistic missiles. And we know before the election, which is coming up in, what is that going to be, a week from Tuesday. So elections are going to be here before we know it. And they vowed to attack before the elections. So you could have a really strong bullish prognosis on oil. So that's a bit of a diversion. Maybe we'll take a look at an oil chart here in a minute. So the jobless claims number came in. The markets are looking like they're ready to bounce. Then the S&P 500 is due to rise about half a percentage point. And so we're looking at this chart here, and the S&P 500 will probably start rising back, having bounced. Look here, everybody. If you're not a fan of support resistance by now, what's wrong with you? Look here, 575, high there, support there. Yesterday, we get a bounce off that level. This is what's called a hammer pattern in candlestick trading. Here's the head of the hammer. There's the top of the handle. There's the big part of the handle. A lot of volume on that day. Normally, when you see that pattern there coupled with high volume, you get a bounce. And indeed, we're going to bounce a little bit this morning. I think from here, we might test all-time highs. The jobless claims number coming in this morning, again, for this, weeks in a row, the jobless claims numbers have been below expectations. So the job market is firm. The Fed's meeting in 2 weeks. We're going to have an interest rate decision 2 weeks from today, on November the 7th. The Fed's going to do something. And it's looking more and more and more like they're going to cut rates. So all that said, I'm bullish on the market. Certainly, if the SPYs close above 585, get ready for the next up run. Now let's take a look at the NASDAQ here. Tech stocks are starting to announce earnings, and you can see a similar pattern here. Tech came down below 490. The NASDAQ is up quite a lot. So we can expect there to be the NASDAQ to be above this 490 level once we get an open. So I'm bullish. I'm bullish on the markets. I said oil. Let's go back to oil real quick here. So here's oil. I'm really bullish on this because, one, we know Israel will attack Iran by November the 5th, which is election day. And oil is already starting to rise in anticipation of that event. So I think it's a really strong prognosis to have a bullish run on oil up between now and the elections, or certainly at least until Israel does finally attack. Now, we do have a trade on this one that we'll look at here in a minute. Now, Ryan, you mentioned something that there was a stock on our radar that had earnings yesterday. Well, before I show you that stock, can we take a quick look at the earnings calendar for this week? Let's take a look at this.
It looks like there's a couple of earnings going on this week, one or two.
Just a couple. The 100 S&P 500 stocks will have announced earnings by the end of the week. And there's some big names on here, right? There's Tesla from last night. Lam Research had a bullish run last night. Newmont Mining. UPS this morning moved hard. I haven't looked at the other ones. We've got some other companies coming out later in the week as well. And this kind of density of opportunities will continue probably through almost the end of November. So we've got another month, around a month of this kind of density of opportunities. And for that reason, I really want to encourage you, if you have any stocks you want to look at for today, please pop them in the chat box, and my brother Ryan will bring them to the table. All right. Opportunity rich. Let's go to our portfolio, y'all. I'm going to start with the USO trade. We could even do another one. This one came off yesterday. Let's take a look at the risk graph. This software, if you're interested in it, is Tom's Tools. I use it to graphically depict my risk and reward and the max profit and the max loss and the potential return on investment. It gives me a beautiful picture that tells me where my profit is. Anything to the right of this line is profit. Anything to the left is risk. The stock price is on the vertical axis. I can anticipate how much I might make if the stock drops, or how much I would make if the stock rises. So it's a really beautiful way to visualize our trades. All right, so we put this trade on 10-10, drawing our line in the sand at 69. Let me take you to a chart of the USO once again. Get the right place here. Get rid of that. I don't need that. So here was our line in the sand on USO when we placed the trade. Not too long ago, we placed the trade, and we were going to make money as long as USO stays above this 69 level. Right there. Support over here twice. Support. Really good level. Bullish prognosis on oil. This trade came down a bit and then bounced, and we are now out of this trade as of yesterday. So we sold the credit spread for 13 cents. We bought it back for a penny, and we netted on this trade. Let me show you exactly the net. Is we made $12 per contract, times 5 is $60 on $450 of risk. So that's a nice little 12% return we nabbed in a matter of 13 days. All right, so there's USO, winner, chicken dinner. And let's go to the other one on Taiwan Semiconductor. They blew out their earnings. And then we got in on this day. This happened to be on a Thursday. We got in, and then TSM did a little bit of profit taking. And then yesterday, nice big bullish bar. TSM will likely open higher today. So this one is in really, really good shape. We sold that credit spread 187.50 credit spread. That's our line in the sand. That corresponds to here. Stock goes up as time passes. Tick, 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 tick. Money, money, money. Up, money. Sideways, money. It can even drop, but as long as it doesn't drop below 187.50, we make money. Up, down, sideways. Already, that's massive probability, but it's even better because we know they blew out their earnings and lifted future guidance. And chip stocks are starting to bounce. So this one is in really, really good shape. Very likely this will be a winner. And it might not be, of course. So Ryan, let's pop up the performance. Let's talk a little bit about performance. And then we're going to go into our first trade. I've got 4 minutes, so I'm going to do this fast. So this is our 2024 Snipers performance. And when I first started this show, beginning of the year, I told you, I said this system runs at about a 90% win rate, 90% win rate, percent of trades with a gain, 90%, and we make 10% every 7 days. So we're making our 10% every 5 days. So for example, I keep saying this because we get new people on these calls, and I just want you to not get too skeptical about making 10%. Because if you make your 10%, let's go through it. If you put 368 in a trade on average, that's our average risk per trade, and you make your 10% and your whole time is 5 days, you could use that again and again and again 4 times. There's 4 weeks in a month, maybe even 5. And that number there starts to add up very, very quickly. So this is the game we play here on this show. And now what I'd like to do is go right into our trade of the day, Ryan. You might have heard of this company. It's owned by Elon Musk. So Tesla shares jump on a profit beat, and Musk's prediction of at least 20% vehicle growth this year. They're dropping the price of their cars. I almost bought one, but I was moving to Costa Rica, and I didn't think I'd find many charging stations here, and I was right about that. But their cars are getting cheaper. They're beautiful cars. I've actually test driven them. They're just magnificent. If I ever go back to the States, I'm going to get a Tesla. All right, so Tesla shares jump. Great earnings. Let's go to a chart of Tesla. I'm going to go to my little run sheet, my little watch list here, and here's Tesla. All right. Now, Tesla was here yesterday. Earnings happened between then and now the stock's trading right about around 240. Let me go see the current live price of Tesla. So Tesla is trading at 213.65. Oh, no, I'm sorry. That's where it closed yesterday. It's currently trading. Look at my little pointer there at 244. Just over 244 and almost 245. So the stock is, as I speak, the stock is right up here where my pointer is. All right. Now, where do we put our line in the sand? Well, a couple things we want to look at. Well, one, there's resistance at 240. The stock is already at just above 240 pre-market, almost 245. So that's a level of protection. The stock's going to open up here above it, 4.5, 5 points above it. There it is. It opens at 244.88. That level has a good chance of holding. And then I can put another line on the sand here, a line in the sand on the chart here. 230 for me is a good level on this one. And then 220 would be even safer. So the game here is to pick your line in the sand. A line in the sand is quite literally a point at which you make money above. So no matter what happens, stock up, sideways, and down, as long as it doesn't come below your line in the sand, you're going to make some kind of money. All right, so I'm watching the stock dance with 245, which is resistance as well. not gonna. You can see the line there. It's 245 is resistance. Institutions and retailers are saying, is that high enough? I don't know. I don't know. That stock could retrace from here. It's possible. It could continue up. I don't see it above 250. Just watching it a bit, and I can start to see that it's fading. These are live data charts. 243. It's dropping already. All right, now it could drop below 240. I don't think it will, but it could. If it does, then we might see it back down to 230. So I'm just let it dance for a little bit. We're 1 minute into the market. I don't want to do too much waiting here. Let's just see what the stock's doing. All right, it's holding up pretty good. Now, if I could get something down here at 220, I would like it. So now I don't know what the pricing is. So then I go into Tesla. This is a simulated trading account in Thinkorswim. I'm not suggesting that you go get Thinkorswim. It just has a really nice simulated environment that I can use to show you how to place these trades. So normally we go to 15-day options right there, November 8. These are Friday expirations. And then I can go down the option chain here and I can start to see where there's some credit. All right, so 200 is what I would like to perhaps get. Now I can see here at 200, which once again is right here, or no, 200 is way down. I want to go to 220, at least 220. And I see at 220, there's 43 cents. I'm on that. I want it. I'm going to do one of these. Well, let's do two of these. Selling the 220 puts, buying the 1750 puts, showing a 44-cent credit. Let me go get that. And let's go into, so I just sent it in. Let's take a look and see what the pricing is. I'm asking 43. It's not filling. I'm not going to get greedy on this. I want it because this credit will dry up pretty quickly. Another quick tip, everybody, is if you use a GTC order here, sometimes, not always, that helps you get a fill. So I'm going to put it in at 40 cents. Oh, I just got 45 cents. Wow. That, ladies and gentlemen, is an awesome, awesome trade. We just got filled here at 45 cents. Let me show you the trade on Tesla. And we just sold the November 8 220 puts. And then we bought underneath. I'm just going to verify that I got it right here. 217.50. Yep. 217.50 on the bottom. And we just got 40 cents. Now I'm compelled to actually build this risk graph for you so you can see the risk reward in it. But before I do it, out of the guidebook that we'll talk about here in a few minutes, you can actually calculate the return on investment on these credits. So our spread width on this trade, if you see here, our spread width on the fill is 2.5 points. 220 minus 217.50 is 2.5. So the spread width is 2.5. So the calculations are, if you know what your credit is, and we do, it was 40 cents. Gerardo, you know what to do. You can actually figure out your max risk in the trade. Okay, to figure out the max risk, you take the width of the spread, 250, subtract the credit, 40, and your max risk becomes $210. Now, your max return on investment percentage is the credit, which is 40, divided by the max risk, which is 210, and that shows a potential return on investment of 19%. What? 10% is good. 19% is almost twice as good. And to complete the conversation, once you know your max risk and you practice proper trade management, you would only put 2 to 3, maybe 5%, max 5. 2 to 3 is industry standard. So if your portfolio is worth, I don't know, $25,000, then if you risk 5% of that, you can do the math. So in this particular case, we are looking at a $10,000 account and we're allocating 2% of it. Am I doing this right? I can't do the math right now. I'm too tired. Anyway, do the math, figure out your max position limit, and then you multiply the number of contracts times your risk and go no higher than 510. That wasn't well explained. So in other words, if we did 2 of these contracts, our max risk on this trade would be 420. If I did 3, it would be 630. So position sizing is critical. Here's our total risk in the trade. And now we are protecting the integrity of our entire portfolio by not backing up the truck and putting half your money in this trade because you think it's so awesome. All right. Now, last piece, I'm not going to build the risk graph. It's going to take too long. The last piece is most important. You want to manage your risk. Manage your risk and let the winners take care of themselves. So here's our loss exit. If the stock closes less than 220, which is our short 220 put, which is our line in the sand, which is this line right here. If the stock closes below that point, then close the trade. Is it going to get there? It sure doesn't look like it. It would have to drop below 240, 230, 50-day average, and then it gets to 220, and they blew out their earnings, and they're expecting 20% more vehicle sales coming up. So it's very unlikely that would happen, and it could. All right, so that's the most important. Manage your risk. And then to collect profits, all you got to do is create an order, flip the battery in backwards, and buy the spread back to close for 10% of the original credit, which for us, for me, would be 4 cents, given that we sold the initial spread for 40. All right. Ryan, that's a good trade, brother. Do we have any others from our beloved community?
Let's see here. Somebody did actually ask about Tesla. So
You're welcome.
let's see. James asks, let's see. NOW?
Now?
Ow.
Right now? Service now?
That or he was
let's
really
look at
excited about Tesla because he wrote Tesla, comma, now.
Oh, man. So ServiceNow obviously has gapped up. All right. Now the system is simple. You start just deriving your lines in the sand. Now I'm really interested in this 950 level right here. And why? I'll show you. Let me create this at exactly 950. Not 949, not 951, 950. Check out 950. What happened here at 950? Resistance came close to 950 here as well. The stock right so far, it's dancing on either side of 950. So what I don't want to have happen is that the stock comes back down like it did over here. Bounce, nope, nope, ba-boom. If we get a nope and a ba-boom, I don't want to be in the trade. So I got to be careful with that. Now I'm watching the stock as it starts to make a run where we are 9 minutes into the trade. So it's starting to look interesting, but let me do this. Let me check the news and see why. I'm quite sure, although I don't know for sure, that ServiceNow just must have announced earnings. So I can go to finance.yahoo.com, type in the symbol now, right now, and we can take a look. Okay, so ServiceNow Q3 earnings call highlights strong growth and strategic AI innovations. Sales growth fails to impress AI-hungry investors. All right, I already don't like it. There's so many of these, we don't need to have anything mixed. So AI-hungry investors aren't super impressed with their growth figures. Let's see, I can just look through these real quick here. They beat on their earnings. They named a new chief operating officer. Beats on Q3 sales, but contract wins slows down. So this is not a like, oh my God, we're blowing it out and we're getting new business and our AI strategy is amazing. So we got a little bit of a reflex move in it, and it could keep going up. It looks like it wants to. So I'm not 100% on this one, but if you like this chart, then I would say on this one, don't get any closer than 900. So that would look like selling the 900 put and buying one underneath. So yeah, I think it's a decent chart. The earnings is mixed. I want beat on sales, beat on EPS, raise future guidance. Bull. I mean, all bullish. It was great in the past. It's going to be better in the future. That's more like what we want to see in the news. Technically speaking, at least right now, this is a very nice bullish technical pattern. So as the stock starts to rise further, I would consider a 900 put spread, but no closer at this stage. So that's a decent one.
Cool.
What else you got?
Let's see. Got two more for you. CLS is going to be the first one.
All right. Celestica. I like this one as well. I was actually looking at this one pre-market, and let's do the same deal. Let's go see what their earnings news was. All right. I want good news all over the place. Okay. Revenues beat estimates. All right. So their revenues were higher than expected. Record revenue, strong EPS, earnings per share. Let's see what else. Yeah, that's all good. What I'm looking for now is, have they said anything about future guidance? I don't see anything in the headlines. Not an absolute requirement, but I can also go check the news that's more granular. You can get news anywhere. Your broker has news, whoever you're using. And then I can take a look. And I'm looking for Outlook. Calls for higher year-over-year revenue. All right, that's good. Revenue guidance above estimates. Ba-boom. Perfect. They beat and they raised revenue guidance above estimates. So a beat and a raise. I like it. Because of that, notice that I didn't have that on service now, and I'm watching the stock breach this level here. I mean, that's a very enthusiastic level. Where I'd like to sell here is right at 55. Right at 55. Right there. I wouldn't go any closer. Let's see what's there. Let's take a look. I want to sell at 55. Round number. Resistance over here. Look left. Look left. Resistance, 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 support. Yesterday's support. Ba-boom. Not likely. The stock will come back down below 55. So let's see what we can get at 55 in a live environment. Again, 15-day options is typically the sweet spot. You can go less, you can go more, no more than 21, 22 days in this case. That would be okay too. But 15 is generally where we like to be. And then I go look at 50 and I can see there's no money there. Right now that's 0. And then I can start lifting it up until I see some credit. I'm looking here on the available mid-price credit, and I want that to be 10% of the spread width. So I'm looking for 10 cents. And the first place I think we can get 10 cents is at 55. Let's see, 54 shows 7. You can see the data is a little bit skewed here. 55 shows a debit, but that'll be a credit. Let's see if we like 55 then. Let's go back to the chart. Oh, that's where what am I doing? I had the wrong strike. That's perfect. That's perfect. 55, 54. I'm going to do 5 contracts of this. And I'm going to ask, it says, oh, it's a debit. It isn't. The slippage is just wide because we're still in the first 15 minutes of the market and there's a lot of feeding frenzy going on. Options are very expensive right now for these big gapping stocks. So I'm going to put it in for a penny credit or 10 cents credit, 555. And let me go ahead and throw this one and throw this hook in the water. That's all I'm going to do. You either give this to me or I'm not doing it. I want 10 cents. If you don't give me 10 cents, there's so many others. I don't care. Let the trade come to you. Put that in at 10 cents. Let's let that breathe for a bit. And let me give you the trade. CLS November 8, 55. All right, so here's the trade I just did. November 8, 55 put. And then the 54 underneath. And I want at least 10 cents. Take no less. That fills or it doesn't. It's out of my hands. That's my trade. You can give it to me or not. I'm letting the trade come to this guy. Do the same. All right, Ryan, that's a good one. Do we have any more?
Very nice. Got one more for you. UPS.
I was hoping somebody would say UPS. Oh, interessante. Huh. This spells more opportunity. Let me first off show you this. 145 is resistance. The stock gapped up to 145 and then held. That level held. The stock is now below this blue line, which is the 200-day average. Make sure that you're putting these lines on the chart at round numbers because they work, except when they don't. Nothing works 100% of the time. But I'm editing these settings. I'm going to make this exactly 145. So when you see a stock gap up to 145, that's where it opened, almost to the penny. It opened at 145. Not 146, not 144. 145, round number, and it's held in this case. So if that happens on your trades, you got to give it a little time to breathe. And we can see now the stock's coming down. Now, how far will it come down? I don't know. Let's look at the earnings. This was an earnings move. What do we got on United Parcel Services, UPS? UPS rises on earnings beat. UPS, let me see. UPS stock rallies on return to growth, but delivers a caveat. Oh, wait a minute. UPS third quarter results top street views, full year revenue outlook cut. Okay, that's not what we want to see. Yeah, they beat on revenue, but their outlook is lower. So that's mixed news, and part and parcel probably the reason that the stock hit that level and then started coming down. Now, what do we do with it? Well, I'm not liking the move. Even as I speak, it's setting lower lows. It's right at 140. Let's watch this for a little bit. So 140 is a natural round number resistance level or support level. So let me make this exactly 140. And now I can watch and see how it did so far has bounced off 140. All right. Now, I don't know. It could continue dropping from here. I don't like that they cut their outlook. And for that reason, the conservative investor would say, I'm not taking it. If you like it, though, I think down here at 130 would be as close as I would get on this one. Why did Mikey pick 130? It's a round number. That's one reason. And the other reason is that over here it was resistance, almost to the penny in some of these bars. And then it became support. And then it became resistance after the stock tanked below. And then it ran up and it came back down to 130 and bounced, came right back down to 130 and bounced. So it's not super likely that we're going to see the stock below 130. It's a strong support level, a strong line in the sand. All right. I'm going to give you one more idea. I can't help it. I think USO has a short-term bullish prognosis. And what I'm going to, I'm not going to do the trade for you. You can figure this out yourselves. But I like this at 67. Let me see. Yeah, 67. Why did I pick 67? Well, it bounced here at 67. More likely that we'll see oil rise in the next couple of weeks due to the impending Israel strike on Iran. Most likely that's going to happen. That should keep oil from at least dropping. maybe staying the same, but I think it's going to lift the price of oil. So if oil does come down in the next 2 weeks, then it would have to drop all the way to 67. Oh, heck, let's do it. Let's do it. Let's go into trade here, USO, and I'm going to do a 15-day trade. Let's look for 67, 67, 66. Oh, that's not right. It ain't 83 cents. Let me see here. There's no way it's 83 cents credit. All right. Well, let me just put it in for 10 cents. 67, 66. And I'm going to try it 15 cents, see if we can get it. 83 cents is not real. And let's see if we can get 15 cents on this. And if not, I'll drop it to 10, drop it down a little bit until I get my 10 cents. I'll take 10 cents all day long, baby. So let's go in here and I'll show you this trade. So this is the USO November 8. And the short strike 67.66. I just think I got it. I just got 19 cents on that sucker. Look here. Just got 19 cents down there at 67. Are you serious? 10 cents is great. We've almost doubled that. So you can go after this one, 67.66. We just got 19 cents. I'd say 15 cents certainly would be available. And you know the rules by now. Get out if the stock closes less than your line in the sand. GTC to buy the spread back. In this case, let's make it 2 cents. All right. Now you can tell I like this. And, this is one of the things, this system is the system that I've been doing this for 25 plus years, teaching and coaching and trading. And I've been on the lookout for a system that performs well, that's as rote as possible, and it works. And for me, this is the system that I give to new traders. And that's why we're doing it here free live every Thursday at 9:15 Eastern. And to make it easier on you, we have this beautiful guidebook that I wrote, lots of graphics and pictures and a few formulas. It walks you through the 5-step process to find opportunities, determine lines in the sand, what kind of news to look for, how to construct a credit. What's a credit spread? The guide will tell you what that is, how to construct them, and most importantly, how to manage your trades. That guide is free. Free. Grab the guide if you don't have it already. There's a link below my face here on the recording. There'll be a link. Grab the guide, read through it, and then join Ryan and I every Thursday at 9:15 Eastern Time for high probability short-term profits, the sniper way. Have a good day, everybody. Much love. We'll see you next week.